share, subscribe, comment underneath, and also underneath is my free training to get your trading kick fired. So I'm going to do another FX pair today. I just thought I'd do this so that I can get everyone rolling and understanding what's going on with the pound, the Great British pound against the Swiss franc. So some really interesting stuff to go over today. I've just got my news up on the right as well. So I'm fully aware of what's going on there. You can see on your daily, right at this point, you're coming to your key 20 MA straight off from a move from the previous low. Okay, now the reason why I'm labeling this will be made quite clear in just a second, but just for the duration of this video, just bear in mind that you've had a push recently, so I'm getting you to understand what's happened in the very recent times, about a week and a half. Had a push recently, and it's taken you to the point of 109.8 on your daily. Just bear that in mind. So if I start off on the monthly and I go way back, you can see the trend with Swiss franc pairs has been down and down and down and down and down and down. In other words, a new low and a new low and a new low. And if we look at sort of 2011, you can see that what starts to happen is these big candle wicks occur. You get these big drops in these Swiss franc pairs, and then they're immediately rejected back to the upside. But lo and behold, every single time you make a new low. So it's clear that the Swiss franc is becoming more and more preferable and stronger than all other countries, okay, which is relatively beneficial for them due to imports and exports. But you can see in much more later times, 2022, almost exactly a year ago, just over a year, you had your last candle wick and then a push straight back up. So all of these big rash falls are getting rejected early. So there's clearly buying power straight away, but then they're slowly tumbling under the low. So given you've seen this coming down and down and down since 1974, okay, we're almost sort of 50 years going down, and given you can see that every single one of these candle wicks has proven useless practically, and it's not just the pound against the Swiss franc, okay, it's various other Swiss franc pairs as well. Since you found that useless every time, what would you like to do with this? Okay, so you've got two choices. Obviously, you could be long or short. Now, given what I just said about you getting this spike down and a push up consecutively every single time, you know, if you zoom into your weekly chart, you can see that what's happening now is you've had the same thing. You've had your push up and you have slowly started to fall again. As you can see, I'm labeling now. So the market is just crumbling down, crumbling down, and now it's looking quite weak again. So the next phase of the move is better looked at on the daily, which is what we'll come to and what we started with. But you can see on your weekly, there's this real level formed resistance here, okay? All these points, which I'm going to label now, causing a real wall for price. Okay, you can see there's one there, there's one there. All of this resistance is going to have to be broken through, and it's probably quite unlikely that that is going to happen immediately. The stronger the resistance normally, the longer it takes, unless you have some shocker move with the Swiss franc and things change. I would expect your moving averages on your weekly, by the way, to curl over slightly and like that, and as your price comes up. So really, in your weekly, it's looking like you're coming to somewhere where you've got strong resistance. That's going to form basis for new shorts. Like I said, the market has fallen and fallen and fallen for a significant period of time. Your push-up hasn't done much. From a technical basis, okay, you could say yes, technically it's a long on the very long term, so it may go higher. But in the nearer term, which is what we're looking at, you can see you'll come into this 20 MA. More importantly, this 40 MA is coming in line with all that key weekly resistance, all that selling power I've just labelled, right? So it's likely that that is going to be your area for a bounce within a significant retracement. Now, if it does go higher to these key moving averages, you could consider DCA shorting again. Like I said, I wouldn't be surprised if it does get higher. I mean, every single bounce it's had, it has eventually gone much higher. So just bear that in mind, Okay, I'm not saying it can't go higher, I'm just labeling where it's likely to bounce to the short side. But even if it does go higher, you've seen the trend has continued down and down and down. There's clearly weakness against the Swiss franc for various pairs as it gains value. So I wouldn't be shocked if that continues, but I would just be more careful where I take my short entries because I want market value. So it looks something like this. I'd be shorting as the market comes up to trade in line with that long-term short direction. If I was going to take it long, I would probably have to do it under the low. Okay, I wouldn't take much strength in the low you've seen already, and it would probably come in line with key price action levels you can see on your daily and weekly to the left over here. Would be more or less 107. That's where I'd probably rather buy it. I don't think that long entry you had before is going to hold much weight, and I think you'll go through it. So I hope that helps as always, guys. Don't forget to like, share, comment, and subscribe. And of course, get my free training. It's right under the video. Thanks for watching, and I'll see you in the next one. See you there.